Good afternoon and welcome to the Strip Tinning Holdings PLC full year results investor presentation. Throughout this recorded presentation, investors will be in listen-only mode. Questions are encouraged and they can be submitted at any time using the Q&A tab situated on the right-hand corner of your screen. Simply type in your questions and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, the company can review all questions submitted today and publish responses where it is appropriate to do so. Before we begin, I would like to submit the following poll. And I would now like to hand you over to Executive Chairman Adam Robson. Good afternoon to you.
Good afternoon, everyone. Thank you very much for joining us in good numbers. We're very pleased to talk to you today. We're here to tell you about our 2023 results and also give you an outlook for the business. Our results are, as we indicated in January, good progress on sales and EBITDA, and we'll go into more details on that. Good progress on cash. And I think for me, the most important metric in the business is that our gross margins in the glazing division, which, as you know, is the core cash generator for the business, improves from 3.6% to 28.7% in the year. And that was a run rate improvement, actually exited 23 at a higher rate, and we look like we're reaching 40% in 2024, which is our target rate, and that returns the glazing division to being the profitable cash generator that we've expected it to be. And you'll also hear it's also a high growth part of the business with the significant new wins we have. So post the year end, we had two important events. One was the fundraise, which again we were delighted with and pleased with the response again from some of you. Raised £5 million gross to invest in the further development of the battery technologies division. And on the glazing side, in the last month, we've announced two major PLC wins, which we'll again talk much more about, with a total lifetime sales value of 18.6 million. And that in a further such wins in our pipeline. So our outlook for this year is very positive. We've now increased the lifetime sales value of all our nominated business to 53 million, which is a substantial improvement of where we were at the start of the year. And we expect a further major battery technologies nomination. Still, we've been forecasting it for the first half of this year, and we continue to maintain that guidance. And we'll talk to you a lot more about that. There was a question from one of you pre-submitted would this change to lead to any change in our guidance? It's first worth making the point that it's not our guidance, it's singers who would decide if they did make any change to their guidance. But what I would say for this point is, with the wins we have and that we're expected, that will take us firmly to be able to meet the market expectations set by singers. But I don't expect that immediately they would be changing their guidance. One of the things we wanted to do today was just talk to you about an organisation change that we've announced. And the key organisation there is that Mark Perrins is as of the 1st of June, takes the role of Group CEO. And I'm delighted that Mark joins us today. And I'll let him introduce himself briefly. Mark has been the managing director for the last 2 years. He's been absolutely at the forefront of transforming the business operationally and having driven those two large PLC sales wins. And so this is a succession planning exercise that we've had in mind for some time. We now think Mark is ready to take on the full leadership of the group. And to facilitate that, Richard Barton, who, as you know, has led the company for many years, will be stepping to the role of deputy chair. So that will be a non-executive on the role on the board, although I'm sure he will remain very influential in us in sharing his wisdom and insight on our sales focus and our sales execution, which is where his track record of success has been with the business. Obviously, no change in my role and no change of that of Adam Lavan, our CFO. Just let Mark introduce himself now.
Well, I joined Striptin in March 2022, so just the month after the IPO. I have a career in automotive, tier ones, just in time, just in sequence, with Plastic Omnium, with Lear, with Coito. I grew up in a Toyota Group company, so learning lean manufacturing. I held various roles within these business, European Quality Director at Plastic Omnium, various ops roles, plant director roles, which is very useful for knowing what good looks like in terms of bringing that to Striptin. So nice to meet you.
And Richard, anything you want to say?
No, just as Adam mentioned, this has been part of the strategy and the evolution of the company and the board. I'm delighted Mark's joined us. He's taken over the engineering, the day-to-day management and the manufacturing side, things that I wasn't especially good at, but certainly now gives me much more time to concentrate on the strategy, particularly in developing more of the PLC business and strengthening the contracts and the customer relationships. So I think now a very strong team that has all the skill sets we need to move forward.
Thank you. So what we'll do now is hand over to Adam Lavan, who will...
We got one extra slide.
Battery technology. Sorry, yes. Yeah. Thank you, Adam. The other thing we were just announcing, which doesn't reflect any change in strategy, but just a clarification, we've renamed what we were calling the EV side of the business to battery technologies. And there's two reasons for that. One is that EV is very important to the glazing side of the business. About 40% of all our glazing sales go onto EV platforms. And so it sort of was some clarity needed there. And then on the battery technology side, whilst we do work on what people think of EVs, which is typically cars, we also work on trucks and off-road vehicles and even non-vehicles at all, like static storage. And so I thought it was important to reflect that broader market focus for our battery technologies activities. So from now on, we will refer to them as the battery technologies division and the glazing divisions. Adam, the 2023 results.
Okay, so picking out the highlights as we see them, sales have increased by 6%, partly driven by the price rises we put through at the beginning of 2023. Good growth from the business. And but the main point is the recovering gross margin. So we've had a £2.8 million swing on the gross margin, and that's restored the gross margin percent to 31%. And that average selling prices up, productivity up, with the number of production heads reduced. And most pleasing, we've got a gross margin bridge. So what that's resulted in is EBITDA for the trading business at 0.8 million, and on a consolidated basis for the group with the PLC costs in line with market guidance at just under 0.1. The overall loss for the year, again, a £4.1 million swing. So the business is back. In terms of the cash flow, we have started generating cash at operational level again compared to prior year, and that was at 1.7 million before the PLC cost, so 1 million coming into the business. We continued the investment into battery technologies, so 1.65 million has been spent on predominantly on new capital equipment for that division, and actually at this stage we actually repaid more debt than we took on during 2023. And although we were utilising our invoice discounting facility, working capital facility at the year end, that's now currently undrawn post the fundraise in January. In terms of balance sheets, I think the key point on the balance sheet is around the working capital. We've reduced the stock by 0.6 million, and we're intending to get that reduced further, a target to get below 1 million. That's proactive management, better control of the supply chain, and better ordering from our new SAP B1 system, and the ERP system. Debtors, despite the high sales, are lower again. We're pulling our cash in better, and we have a good process for that, for collecting that. And the only issue we've got to work on a little bit more now is actually on the trade creditor side. During 2022, we had built up quite a few creditors, and we've had to pay down non-production suppliers. It's swung a little bit, the pendulum swung a little bit too far the other way. We'll boost creditors up again, but as part of the material price improvements that we've been generating, we've ended up with some suppliers on worse payment terms, but we're in the process of negotiating better ones over 2024. Okay, next. So one of the really good things, one of the things I'm most pleased about on the gross margin improvement is that it's been across all areas of the cost of goods sold. So obviously the sales were up, but material prices down, and shipping also down, all through management actions contributing to that. So for instance, on the shipping side, we're getting alternatives to DHL, who've been our preferred supplier before on certain routes, but also the operational improvements that Mark Perrins has put in has meant we're able to use scheduled freight services a lot more than we were in 2022. So that's all moved in the right direction. And then the one that I'd really pick out that I'm pleased with is labour. So there's all the cell layouts. I'm stealing Mark's thunder really, but all of the cell layout changes and factory reorganisations he's put in place have reduced headcount substantially, and that will continue as well through 2024. So we'll see further improvement on that and sales per head and productivity due to some automation and the final implementation of a single piece flow methodology that he's brought to us that will also improve quality as well. Adjusted EBITDA. We talked about that on the opening slide. So the one thing that I will just draw out for you is within those numbers, the stat account presentation, there is grant income included. That will not, we have some grant income in 2024, and we're actively being encouraged to apply for further grants, but we expect that to be greatly reduced within the 2024 financial year. So we won't have the benefit of that. And then you can also see on the engineering staffing costs bar, that's a negative, but that's obviously a reflection of the increased headcount and investment we've put into developing the battery technologies business. And although that will continue, we will have to continue to increase that to meet the demand we're seeing for the pipeline that we've got. Obviously, that will cap at some stage in the not too distant future, and then we'll be leveraging that as the sales grow, and that investment won't need to continue to be made. And then on net debt, this does include our lease liabilities as well, this part, not just bank debt. We have moved from 1.4 million at 2022 year end to 2.5 million at 2023 year end. And the majority of that has been the cash burn. As I said, the debt itself hasn't really moved, but the cash burn that we had, we generated cash, but then deployed it on capital assets. That's increased it. Post fundraise, we were at 1.6 million net cash rather than debt. Yeah, we're obviously in a good place following that fundraise.
Good, thank you. We'll now go on to the business update. I just had a few questions come in from Nicholas. So let me just address those quickly. Nicholas, one thing you asked about the hyperinflation environment and how well placed we are to deal with that. I think the two observations on that. One is that that recovery from 2022 and us getting the gross margins back up towards 40% this year is a demonstration of our ability to respond to significant inflationary pressures. And also we have learned some lessons. We are now very strict in our contracts on materials inflation, in ensuring we have materials inflated clauses now in all our contracts. Nicholas, you also asked about the possibility of a future fundraise. I can't really go into that except to say clearly there are no plans today for any further fundraise. And then lastly, you asked us how confident we are in the EV division, and that's exactly what we'd like to come on to next. And Mark is going to take you through and answer exactly that question.
Okay, so yeah, on our battery technologies now, we won a grant last year. We conducted a study with FEV Consulting. So FEV are a large German consulting group, 7,500 employees, 750 million, have a lot of know-how in batteries and e-powertrains. So this study covered many aspects from our competitors, addressable markets, technologies. It involved battery teardowns, it involved expert interviews with competitors, with suppliers. The slide I want to talk to you about here today is about the addressable market. So we've, together with FEV, narrowly defined our addressable market to not volume automotive, so off-highway, electric motorbikes, static battery storage, autonomous taxis, not the volume automotive. We do have some hypercars clients that we're talking to, but quite a niche focus for which we found that there are really only two competitors. So our specialism is to be agile and focus on those niches. So you see on the graph we have the European market for our CCS or cell contacting system product that we make, and then the US market on the right. Europe being bigger, of course, at this stage. We're looking to take 15% of the market share by 2025, which is around 11.5 million. And with the pipeline and where the advanced stages we're at with some of our customers, we believe that to be quite achievable. And I'll come on to talk a little bit more on the next slide about our pipeline and where we are. The other thing the study did was identify 19 battery pack assemblers. Some of those we know, we already have inquiries or have supplied sample parts to, others were new that we're reaching out to. Okay, so in this chart here, when we last provided an update, there was 12 inquiries. 2 of those have dropped out, which is a red, to talk a little bit more about, and 3 new ones have come in, the green ones. So we've got 13 active programs. Some are in production, some are at quote stage, some we've supplied sample parts or are supplying. I won't go through them all, but the ones to really focus on is number 1 in terms of that program reference, which is an off-highway vehicle. We're in the running for that. There's 3 players in that race. We expect to know where we are in H1 of this year. And then program reference 4. So this is the autonomous taxi. We've been working for quite some time on this. We've supplied in the thousands of samples, many design iterations. We've worked with the client. The clients sent their quality auditors in. They've audited us. We've passed that audit very convincingly. We're approved on their global supply list. We've also done a lot of contract negotiations. So we're very confident on that nomination, and in our numbers, we're modelling to win one of those 2 projects, reference 1 or reference 4. And again, we should know that within H1 of this year. The ones in red that are dropped out were really where we chose to prioritise our resources on other programs with better capabilities. So these are sort of university spin-outs and start-up businesses where it may take them a very long time to get anywhere, in all honesty. So we're focused on some of the bigger projects.
Good, thank you, Mark. What we'll do now is hand over to Richard, who will give us an update on sales developments in the glazing division.
Thank you. Thank you, everybody. So very pleased to talk about the glazing market, and generally the outlook in the market is positive. We know vehicle manufacturing volumes in Europe are really remaining steady. We think there may be about a 4% growth this year, but we're seeing a much higher growth in technology for glazing connectors, really being driven by this new smart glass product. If we could just flip to the next page. Thank you. Sorry, that's a much better picture. So this is smart glass. This is the two big wins that we've reported recently in our two RNSs. You can see the roof in the car. This is actually the BMW iX. There's a trend for more and more vehicles now to have entirely glass roofs. The trouble is, when the sun comes out, the car gets very hot. You can have a blind, but if you have a blind, there's the cost of the blind. The actual roof itself has to be about 50 millimeters thicker. And of course, when the blind is shut, you have no light into the vehicle. You can, as with the Tesla Model 3, an entirely glass roof, but they are tinted, so again, doesn't let much light into the vehicle. The PLC roof, as featured here, when it's either completely clear, so it's a nice space to be in, which is really light, and it's just a nice place to be. When the sun is out, you can push the button and it becomes opaque, and that's a bit like a net curtain. It still lets in lots of light, but it cuts out the EV and it stops the vehicle getting hot. So we have, and I've been banging on about this since the IPO, but we have had this product in production for 2 years on the BMW iX. We were the first to market with the product, and there are probably now 300,000 or 400,000 BMW iXs on the road. The connector itself is as pictured there at the bottom left, albeit this connector is actually about 1 meter long or 1.5 meters long. The technology itself, not really much different from connectors we've been making for a number of years. This connector has some flexible printed circuit technology within it, but the best thing is that the unit price is more like 25 euros per part. And some of you who have been following us for a couple of years may know that the traditional automotive connectors we've been making really since time began, really 1, 2 or 3 euros each. So we found here a niche, high volume. We were first to market and an absolutely cracking price and a 38% margin on the product. The two recent wins have been from two out of the 3 largest glazers, existing customers of ours. And it's interesting that these are now for not particularly for high-end vehicles. I mean, the BMW iX is a £100,000 car, but the new wins we have are really now filtering down to the sort of more mediocre and cheaper vehicles. We're talking about Renault, we're talking about the BMW C-Class. So very pleased that quickly this product is spreading right across the car range. European producers there are an awful lot of electric vehicles coming to Europe now from China, incredibly cheap prices and actually very, very good cars. And the way Europe is combating this is to load their cars up, Mercedes particularly, load their cars up with lots of add-ons, lots of added value extras. You know, the PLC roof being one of these. So we're seeing a big driver. And the estimates from our existing customers for this product are that by 2028, we think there will be a 5 million cars produced per year with PLC roofs. As I said, we were there first. We are the favoured supplier from 2 of the 3 producers in Europe. Indeed, we have inquiries from the 3rd supplier. We do have competition. This company we have talked to you about previously, FEW in Germany, a very good automotive supplier. They've been in the market, pitched up against us for a number of years. They don't have their own flexible printed circuit manufacturing in Europe, and our customers have certainly told us it's key to them that this product is manufactured within Europe. They don't want this product to be imported from the Far East or even parts of it. So we're extremely well placed. We have further inquiries from the 2 customers who have given us the recent nominations. We have further inquiries from the same 2 customers for a further £20 million worth of business, which we will be quoting on over the coming weeks. As I said, we anticipate this market becoming probably £80 million a year by 2028. With our position and with our determination, we certainly are going to concentrate heavily on this product. It isn't something particularly new to us. We're the incumbent supplier. We have samples and prototypes going to one of our customers in America. All the innovation on automotive product starts in Europe. It's closely followed by America. So we're pleased that we have some prototypes going to America to a glazing company who we already deal with. We have a sales team in South America and North America at the moment who have 17 appointments with glazing companies that we already work with, really spreading the word about PDLC as we believe they will be coming on stream following Europe maybe a year or 2 later. So now is the time to get out there to see them to be discussing this. But this is something we promised at IPO. It's taken a while to come round. But as you know, with automotive, once we get the order, we have the order for the lifetime of the vehicle. So it's kind of guaranteed work for 5 or 7 years. I'm very excited about it. It's a big win for us, and we're certainly concentrating on it very heavily. Thank you.
Thank you, Richard. Hand back to Mark now, just to talk about some of the things we're doing on the operational side and perhaps to answer some of your questions around gross margins and pricing and so on in that as well.
Okay, thank you, Adam. So here we've just got some of the key topics of where we've been working. So we've improved safety. Safety is always top of our priorities. Customer service, we've made a lot of improvements in terms of our delivery performance, so our on time in full, and reducing quality incidents. We've been very busy, certainly this year, with customer audits. We've had 4 customer audits this year, and we had a number of them last year, as well as our external certification bodies. And those audits have all gone very well. We've passed with some good compliments. We're working to strengthen the organisation. So in terms of people, I brought in a new Chief Technology Officer who spent the last 8 years in China and Vietnam working with Tata Technologies and working on many Chinese EV vehicles. So he knows the EV and battery space very well. Also a supply chain director, 30 years in automotive. And really, this kind of links into the question there from Lacey on the breakdown of gross margin. So we have worked on a number of areas. So Adam already talked earlier in the financials about gross margin improvement. You can see it there in the productivity item. But also working capital, you can see inventory reduced. This new supply chain director has been able to bring in a new ERP system. It's helped us with our scheduling and our inventory control. So in terms of, again, productivity there, you see the sales per direct head has improved between 2022 and 23. So it's labour, it's shipping, it's inventory, There's a number of items. Scrap is also scrap. I'll come down to on the next slide. Thank you, Adam. Yeah, so in terms of 2024, 2025, those are our main priorities. We've talked about some of the new wins we've had for PLC, glass. It's very important that we deliver those to our customers in a smooth way. So we've got key focus on our project management organisation. We'll continue with the automation. So we've delivered some automation projects. We have some that we're still working on, and we have ones identified for the future. Single piece flow. This is where we're no longer batch and flow in terms of our production. So it's more lean. There's not money tied up in inventory, cash. There's also not quality problems hiding in batch production. And scrap production is another area where there's more work for us to do to help improve gross margin going forward. In terms of 26 and beyond, so we'll continue with that automation, as I mentioned. Digital transformation, our clients certainly are interested in far more traceability and data related to production. And our growth will potentially mean some expansion. So we're reviewing our footprint, and so that's decided by client choices on design, but that's under study at the moment. The FEV study that I mentioned to you previously certainly supports a business case for investment. It shows there's a clear market. We're in a good position to exploit that. With that will be some expansion in our footprint. We're also working in a consortium towards another grant for some innovation on some different products around the battery technologies division that potentially could bring higher margins than the current ones. In terms of the other question, there was a question from Nicholas about price increases. How much could we leverage further price increases with our customers? We don't feel at the moment that we could. When we had a sort of hyperinflation environment, our customers were very supportive with us when we went to them with price increases. That has calmed down, and we are in contracted long-term business with contracted prices. So, of course, if that macroeconomic situation changes drastically, we may go back. But in our current view is that no, we wouldn't look to leverage our customers with further increases. Okay, yeah, I've seen another question here from Colin. Following the price increase in your glazing products, how has the market responded in terms of sales volume and customer retention? So we did know at the time of those price increases that there was a potential to lose some customers, and that has been the case. 2024, we have some business that's dropped out, and some of it we chose to remove because it just wasn't at the right profitability level. So we're far more focused on which products we're targeting, and of course we're now building, as Richard spoke about, the PLC, the kind of products that we have dropped out are the much lower selling price, lower margin, sort of backlight business, for example, for your rear screen. We're focusing the higher tech PLC roofs, segmented, where you can vary how opaque. You can have passengers in the rear, passengers in the front with different levels of shading. Far more technology. The client's far more interested in a partner that can help develop the design with them, and therefore it's a more attractive product for us in terms of margin.
Good, thank you, everyone. Just to sort of wrap up then, so 2023 was a turnaround year for us. We've laid the foundations for a return to profitable growth for the business. We see, as we've talked to you today, very significant growth opportunities in the glazing side, particularly related to that emerging PLC market for smart glass connectors, and on the battery technology side, where we've already got a good pipeline, and based on the market research done for us by FEV, a strong sense of a lot of new battery pack assemblers in Europe and North America that we we can and are beginning to form relationships with. Trading this year has been good so far, in line with expectations, and our guidance for the full year remains unchanged, or Singer's guidance we think is solid. The one thing we're seeing, though, is anticipating that perhaps there's even faster growth and more growth opportunities ahead of us than we might have imagined. And that may lead us to pull in faster some of the increases in overheads that we were expecting next year into this year, in order to be able to really address and secure as much of these emerging markets as we can. So our priorities for 24 are secure these next nominations. Most importantly, our first major battery technologies wins. As you know, we're in production with 3 programs already, but these would be much higher value wins. We have to build up our team. We've a lot of new people to recruit. I noticed that there was one column for a question from Nicholas about that, how is retention of people? And the answer to that is we're retaining our people well. They're very motivated and excited by the progress, but it still remains a relatively tough market for recruiting new people. And then our last thing is we're hoping to get some more grants. That FEV study we had done was funded by a grant, and we're hoping that that's a signal that our funders are interested to provide further funding to us in the future. What we'll do now is just go through and try and respond to any questions we haven't asked. Ken B has asked about opportunities or threats from China. Certainly they're real. They're different on the 2 sides of the business. On the glazing side, I think at the lower end of the market, there's increasing competition from China. But that's the part of the market we have never been focused on and are not focusing on now. Conversely, say that PDLC market is essentially, we haven't yet encountered any competition from China. Our customers are looking for Euro supply on the one side, as Richard talked earlier, and they're looking for a good engineering partnership as this technology emerges, and we're very able to provide that. On the battery technology side, whilst there is both threats and opportunities very much in the volume automotive side, because of our focus on the mid-market, that focus is much less. And again, our customers are coming to us because of our engineering capability and responsiveness. We're working in highly iterative design programs with them. And I think that gives us a strong protection from lower cost economies. I think there was another question earlier about sort of would we be looking at emerging markets and new markets? And I think that was from Marcus. The answer is probably not to a great extent. We have such a wealth of opportunity in Europe and in North America that for the time being, I don't think we will stretch our resources to more widely than that. And with that, I think we've answered all the questions.
That's great. That's great. Adam, if I may just jump in there, and thank you for addressing those questions for investors today. And of course, the company can review all questions submitted today, and we will publish those responses on the Investor Meet Company platform. But before redirecting investors to provide you with their feedback, which I know is particularly important to the company, Adam, could I please ask you for a few closing comments?
Well, first, thank you all very much for joining us. We're very pleased by your presence and indeed the growing number of people who are following us. And we're pleased with our progress so far. Singers in their latest notes on us described us being at a growth inflection point. And I think that's a very good description of where we are. And we're very excited with all the challenges Mark has going ahead. So thank you, everyone.
That's
Thank
great,
you.
Adam, Richard, Mark, Adam. Thank you once again for updating investors today. Could I please ask investors not to close this session, as you will now be automatically redirected to provide your feedback in order that the board can better understand your views and expectations. This will only take a few moments to complete, and I'm sure will be greatly valued by the company. On behalf of the management team of Strip Tinning Holdings PLC, we'd like to thank you for attending today's presentation, and good afternoon to you all.